Stop loss is practiced by most disciplined traders. Stop loss itself is an important criteria to protect your capital in investment. The notion of stop loss is that you have taken some position in the market or planning to take some position in the market. Your plan or action to take position in the market is due to your positive expectation that you can make money from the market. However, if the market works against you, you exercise stop loss or cut loss, sell the asset, so that you protect your remaining capital. If you are buying the market expecting the market price to go higher, you place a stop loss level lower than your buying price. It can be at a support level line below the purchase price. Then the difference between the entry price and the stop loss price is a risk you are prepared to take. It is obvious your expected gain should be much higher than the risk you are prepared to take. Otherwise, it does not make sense. Sometimes the market drops so sharply that it passes through the stop loss level, hence incurring more loss than the calculated risk amount. There is another situation stop loss does not work well. You enter the market with a calculated stop loss. The market did not go against you, but the market goes sideways for a long time, perhaps months or years. Then your money gets stuck. Surely it is a bad investment. We present different approach to stop loss. The aim of this training course is buy low, sell high. And we go through a learning process to determine what is the low that we are making commitment to buy and with what expectation of possible gain. If we do our analysis of homework well, we buy low at the swing low. When we place a stop loss, it means that we are not sure is that really the low that we are buying. Then it also implies we are not sure of the homework that we are doing in buying low. This presents a conflict to the mind. You believe you have done your homework well, yet you also think you may be wrong about your analysis and planning. By placing the stop loss, your subconscious mind may tell you that even though you have done your homework well, you are afraid you still make mistakes. And it gives some psychological comfort that in case you are wrong, you minimize your loss by stop loss. How about we shift our thinking? That you really do your homework well, you enter the trade. Instead of stop loss, if the market goes against you, you should immediately get out from the market, even before reaching the so-called stop loss level. By doing so, you admit you did not do your homework well. You should start all over again. With this mindset shift that you must do your homework well, your mind is 100% making sure you do your homework well. And to do such practicing without stop loss, but get out of the market, you could and you should start trading with small amount of investment until you gain mastery of skill and confidence. Then you invest in larger amount. We will continue to have more discussion on the stop loss psychology. We can have buy low, that is, buy low, sell high, and place a stop loss level. Or we can have sell short, that is, sell high, buy low, and place a stop loss level. We already discussed the rationale of stop loss is to protect your capital so that the market will not erode your capital. There are challenges and disadvantages of placing the stop loss level as per the following situation. The market did reach the stop loss level and the trading season closes your trade. But soon after, the market continues in the direction of your projection based on your calculated analysis. You miss the opportunity and pay the transactional cost charges. Once you determine and place the stop loss level, the market does not need to follow your expectation. The market can go up and down the stop loss level. Even if you're an experienced trader, there is no guarantee that stop loss level will absolutely protect your capital. How then we should manage stop loss principle to protect our capital? My advice is that you should have the stop loss level in your consciousness and keep monitoring the market movement and allow adjustment to your predetermined stop loss level due to dynamic and changing behavior of the market. This calls for your full attention in monitoring the market, especially in the case of forex intraday trading, whereby the changing of price can drastically occur within minutes. There are many methods to calculate the stop loss level. The most common method is the resistance and support lines. We will focus more on the use of Elliott wave theory as a main technical tool for analysis. You buy long at low price because you calculate it is the end of the particular Elliott wave at the bottom. We have mentioned Elliott wave is dynamically changing. You can make a projected Elliott wave pattern as per your analysis, which can be wrong. When the subsequent market proves your assumption and projection wrong, this is the time you get ready to cut loss and exit the market. Likewise, you sell short a high price because you calculate it is the peak of the particular Elliott wave at the top. We have mentioned Elliott wave is dynamically changing. You can make a projected Elliott wave pattern as per your analysis, which can be wrong. When the subsequent market proves your assumption and projection wrong, it is time you get ready to cut loss and exit the market. Stop loss level for short-term trading like intraday forex trading is different for long-term trading, which may be days or weeks or months. All this depends on your homework analysis and projected pattern of the market behavior in the considered time frame, say within a single day, weeks or months. Stop loss principle should be the top of your priority to protect your capital, but not necessary to fix the level at the trading platform. Instead, should be in your consciousness while monitoring the market. There are occasions you fix the stop loss level in the platform system, especially if you are on forex intraday trading, and you need to go to bed while you still have open trade. It is best you close all your trade in forex intraday trading before you go to bed or busy with some other work.